Oh, I have a headache. After the best stock market gains in decades in April, May is off to an ugly start. But despite the tremendous April stock rally, cash on the sidelines has hit a record high of $4.7 trillion. And from here we go to the Fed. From an initial $75 billion per day when the Fed announced the launch of Unlimited Quantitative Easing in March, the U.S. Central Bank first reduced its daily buying to $60 billion per day. Then, about 4 weeks ago, another taper in the bond buying program to $50 billion per day. And that was followed by a reduction to $30 billion per day, which was then cut in half to $15 billion per day. Then last week, the Fed slashed the daily buying to $10 billion per day. And finally, in its most recent schedule, the Fed says that in the coming weeks, it would purchase only $8 billion per day. And from the Fed, we go to Mars, where Elon Musk tweeted that Tesla's share price is too high. Well, there goes $14 billion off Tesla's market cap. And now back to Earth, where everything is awesome once again now that Kim Jong Undead is back and he's alive. Oh, what a relief. Now, I don't really have a headache because I'm doing quite well amongst the turmoil. I hope you all are doing well too. So, let's take a look at the charts. And today we're going to look at one chart, which is the 20-year monthly on the iShares Russell 2000 ETF, and the symbol is IWM. And we're looking at the Russell 2000 because it is the weakest of the major indices. So whatever the weakest is, everything else is better. Looking here, you can see that the plunge down to this point here was just under the 200 EMA, and we bounced back up here to the close on Friday, 125.14. So looking at the bottom to the point where we are today, that's about 1/3 or just a little bit over 1/3 from that previous high there. Going back to 2009, and this is my line here, more or less. You get the idea. We're still below that, so that might be a target for the indice to head to in the coming weeks. But right now, I think we're feeling the effects of a possible correction. We've been talking about that with regard to the VIX. The VIX is a good contrarian indicator, and it was showing that some volatility may be coming. It certainly came here today, Friday, and I'm wondering if it's going to continue into next week. Wouldn't be surprised, so just be prepared. Moving here into the MAC, you can see that the top was there. We came down here, reflected off, back down here. We're at a negative 3.666. Hopefully that's not an omen. Now, the fast line is still heading on down. The slow line is following, but the slow line is above zero. We're still within striking distance of that zero line, so things are not as bad as one would make you believe. Moving down here into the histogram, you can see that we came all the way down here, which was further than 2009. And I think things are starting to slow down, but that doesn't quite show it there. And it doesn't really show it here in the price rate of change. Definitely heading on down, maybe not as low as 2009, but certainly trying to get down there. It may or may not really sure at this point here, but we are pretty low at negative 31.641 there. Moving on into the relative strength, that's perhaps one of the first signs of a recovery. We had that bounce here. It came up and reflected. We got this little fish hook. So it depends upon where that heads to. I would imagine it is going to stay above the 20, and hopefully it stays still above that previous bounce. That's going to tell a lot if it can stay above there. Into stochastics, pretty much the same thing. It's near that 50 or midline, so there is some strength in the stochastics. Looking from here, 2009 on up, that's a straight line, more or less. You get the idea. Again, it's not as bad as it was in 2009 or even 2016, even though it feels like it. Moving on down here into the Williams, another sign of potential recovery was the bounce outside of that oversold territory. Up here, another fish hook. So it depends upon how far down this goes. If it can stay above that oversold territory, then there is improvement. So it looks like there's a few oscillators showing some repairs to this particular indice. The other indices are even in better shape. So I think we have some good things going on, but it's never a straight line. So we are having this contraction here with the volatility. So we'll just have to wait and see how long that lasts. I'm expecting it to last perhaps another week or two, but we'll know more as we continue to monitor the situation. But for now, things are repairing. So for today, that's ChewDog Charts. Thank you.